Final hour session just after 3 p.m. Eastern time on Tuesday, August 12th. We had CPI news this morning. The markets took it as a good sign. How do you battle inflation? Make asset prices go up. So markets are up to all-time highs today. S&P hit all-time highs. Let's take a quick peek. We'll look at the newsprint. It was core CPI was higher today year over year. Headline CPI came in with the same as previous. So we will make a quick assessment of all that. I'm still watching my levels today. This is the previous high at 64.27 from last week, or actually 2 weeks ago. This would be the 31st when Meta Microsoft popped those highs. Here we are just a tiny bit higher. I'd love to see price not be up to these highs at the close of the day. I'd like to see if price can come down just a tiny bit lower. 64.35, 64.30 would be pretty fantastic. If we spike all the way up into 50, that would be not awesome. But if we spike to 50 and then reject off of that, fine. I'm just hoping that we kind of put in a top around 64.44. But time will tell. In about 54 minutes, I'll figure out whether or not I'm making money on the day or losing money on the day. So it'll be interesting. It'll be entertaining here to see where cash settles for SPX on the day. Here we are on the SPY. So SPY with a closed candle above so far. If it stays this way, this is a 639. So 639, if we drop 3 points, we'll kind of, reject off this or possibly have a little fake out candle. SPX, again, zooming in just above the highs by a little bit, only by about 13 points. We'll see if it clings to those levels today. And again, if this is like a melt up for the day and then a fade tomorrow, that obviously wouldn't be a surprise either. Market just does that kind of silly things where it's like it just kind of pushes and presses. I didn't necessarily do anything wrong calculation-wise. I just see like stubborn pricing. If we don't have any type of rejection off these guardrails, then selling into these highs is not going to do me any good if we don't actually go down, right? So we just get to the highs, we stay at the highs. Selling those tops don't necessarily help. So that's what I'm kind of up against today. Let's see if we hit, 45. Maybe we squeeze up to 50, which I would be kind of pissed if we do. But 6449. See what that case is. I do have some extra trades that are pending for some high reward, low risk trades. I'd like to see price, like I said, get back down to like 64.35, 64.30 before the end of the day. So watch. But so far, all-time highs again on the S&P. XSP, same thing with SPY, breaking out a little bit by a few points. The NDX, decent little thrust above that July 31st high. The NASDAQ is up about 0.9% higher. Qs, same thing. I had this boxed in. You can see we've broken the highs in the Qs. So far, right here, up about 0.9% higher. The Dow, still green, not to all-time highs. Actually didn't get to all-time highs with this recovery from April to July. We're still sitting at all-time highs previously from early December 2024, where the Dow's all-time highs. Russell, big, ridiculous rip on Russell. I still think Russell is a good-looking trade for small caps to catch up. This is kind of the valuation play where you see that small caps have underperformed. If the market's anticipating rate cuts and that helps the Russell, then that should be helping our waterfall income trade that we're in on IWM. So I will be watching that here. IWM currently up about $70. So we just got these trades started. The one I'm nearest is this one. So I've got some time. I'm looking to see if we just stay above 225. I can make about $2.20. So I can make somewhere between, let's see, that's 4 wide. So I can make $1.80. Let me use this on the Russell. So I can go $1.80. $1.80 plus 212 plus 219. So I can make $611 on Russell if we stay above 225 and above 221. And that's going into the end of the year. So if we're anywhere close to all-time highs on the Russell, then this trade will be looking pretty good. So if we stay above 225, which we're $1.25 above it now, just continue to go higher. Is there a little chop ahead or maybe some volatility ahead? Maybe. Maybe this comes right back up to the highs and then comes back down for a range trade, and then we head back up to like highs. But I think the market is just pushing with just not a care in the world. If the Fed's going to cut, these percentages are quite high. If I go CME watch tool for the Fed, probabilities 94.4% chance that in September the Fed's going to cut, a 60% chance they're going to cut in October, and a 50% chance they cut in December. So the market's looking at 3 cuts by the end of the year. It just keeps going up. So that first cut being, I would imagine, according to the probabilities here, a 25 basis points cut. What does that do to the yields? That's what the big question is in my mind is, do we see 25, 25, 25 actually move the 10-year yield at all? And I've said this, if the market's seeing rate cuts by the Fed by 75 basis points, is this going to go up 75 basis points, which would not be good, or go down 75 basis points, which would be better? If we're down 75 basis points, then we're finally getting back into Liberation Day lows when the market was essentially blowing itself up, right? This is where we started cutting last September when the market had a terrible reaction to cutting rates rather by 100 basis points, and the market went up 117 bips. So this is what I don't know is going to happen to yields. Are we going higher or lower? We'll find out. Update on DPP. No, I'm still in it. I posted right here. So if you're in my daily profit play, this is the update. I've still got some trades running. I'll tell you exactly where I'm at here in about 60 seconds. So ideally, I need to see price today get back to 64.35. The trades I'm running for daily profit play are right down here. So I have that trade closed out for break even. This was a bear call spread that's up $75. That's a 50 by 60. That was from this morning. That took pretty much all day to fill, but I got filled for $1. This trade is down 300. This trade's down 600. So if I want to make money today, I'd like to see price. This trade is worth about $630. So if price is less than 64.35, then I can make $630 on this trade. If I can get this trade out of the way, then that would be, I don't know, it's going to be close. If price gets back down below 64.35, I might end up taking a small loss on this trade, and I might just manage this in the close. If I can see this trade and this trade collectively net positive, I'm going to take the win on the day. That's the plan. But I need to see if price will go down below 64.35. If it doesn't, I'm taking on more risk, and I might be risking about, $1,500 today, maybe $2,000. But that's like worst case scenario. So hopefully we see a little bit more red to close the day out. I'd love to see a 64.35 or 64.30 by the end of the day. It's just been a stubbornly high, persistent bull market. And like I said, it's just those guardrails, those tops have just not shown any signs of rejecting the price. And that's okay. I mean, I can't control that stuff. I just trade what I thought was a pretty good calculation today. So we'll figure it out. Yeah, so Joy, you good on that? Medic, you good on that? Like, I'm in the trades. I'm still watching. So what I'd like to see happen for my levels would be right in here. I want to see if price can get less than, I'm going to put this chart alarm at 6435, and I'll spot check my prices. So I'd ideally not like to see price revisit the highs. Or if it does, I want to see it fade hard. So I'd just like to see price just sideways or a little red, get to 64.35. Below 64.35 at least gives me a sense of break even or better. I have, that'd be about, I'm trying to think, maybe $400 risk and $600 gain. So it's going to be close if I can close it out for a net win on the day. All right. But like I said in the message, it's like, either way, it's like managing these things into the close. And it's going to get a little exciting here towards the end. Okay. All right. So let's talk some top down again. Markets are up. We've got 1+% on the S&P. We have 1.13% on the NASDAQ. We've got 1% on the Dow. We've got 2.7, a big rip again on the Russell, almost up 3% today. I think this is another one of those runs where, the small caps being such an underperformer, now on the higher likelihood of rate cuts, I think the Russell is a good looking trade. If I go back into my thumbnails, I posted this not too long ago. You can go into my YouTube session and see this as well. I posted this video, not sure when I saved it. Let me see when this was up. This was posted on, where did it go? Access, fudge. Well, it's on my YouTube video. I know I posted a couple weeks ago, but the image is this. Is the Russell the best index for the second half of this year? And it's not necessarily that we see the S&P and the NASDAQ decline. It's more, do we see the Russell outperform? Okay, case in point would be you look at IWM. You look at IWM, these are the previous all-time highs. So if the Russell is going to make a catch-up trade, the Russell could outperform. That's 8% to get to those highs, right? So what happens if the S&P only goes up 3 to 4%? Well, S&P goes 3 to 4% and the Russell goes up 8%. That's an outperformance. So if Russell outperforms, we can still go up in the S&P, up in the NASDAQ, up in the Russell, up in the Dow. But my question is this able to get higher than these highs? Okay. So, I'm curious, and I'm probably as curious as anybody else, like, is this a low and a high? Are we going to actually break these highs? Yep. So what's that break even, Richard? Right. That break even would be about 6439.58. Right. I still haven't been filled on the trade because I was trying to get filled at $12. So I'm still in pending orders. The 35 by 45 is trading for 580. The 30 by 45 trading for over $10. So again, it's like in case we poke up to the highs again at 44. I'm just not going to force a trade. I think I've got enough riding on the trade today, enough risk on the trade today that if I get filled at these levels, it's like get me filled at the very, very high prices with very low risk, and then I'll see how the chips fall in the next 45 minutes. But what would be kind of an encouraging sign to get through this day and survive with a win would be if price, let me go back to the 5-minute chart here. If price can get back below 64.38. So if we can break this low, I think we got a good chance. If we break 64.38, we've got a chance to see if price will give back a little bit of the gains with that stretch move of over 1%. So a couple ways to watch this on the day. We did have a gap up with the announcement at 8:30. Futures was up. We knew we were going to open up with a gap higher, up, down, and then it's ripped all day. So we hit the VIX measurement that I looked at today. We hit 0.91. I expected like a 0.9495. And we look at the move from the open. We pulled back here. We still went up, 0.92. So that's a big move, man. From that level to that level, 0.92 with intraday price action. And from the gap close yesterday to push today, we're 1.08. So, as far as what I typically calculate as far as tops and bottoms, that was kind of my top level on the day would be about 64.40 to 64.45. And I had that posted here, right? So between 64.35 and 40 be potential top, and modified would be once we had the VIX up to like 15.3 this morning, I was looking at like a 64.50 to 60, which would have been my top gamma level. So I'm just going to let this marinate and see how price closes. I can't just go, super heavy, super risky because I could still lose on the trades. So if the market's going to be stubborn and just sit here and sit at these highs at 64.45 all day or 64.50 for the end of the day, I don't want to just throw in a bunch of trades with a bunch of risk. So if I get filled here, I'm risking $1. If I get filled, if I get filled here, I'm risking $1. If I get filled here, I'm risking $3. If I get filled here, I'm risking $1. So I'm willing to take that extra risk, but not an extra $300, not an extra $400, not an extra, $200. So I'm already in for if I lose today, I'm still going to lose probably close to like $1,000. But if I can carve out a tiny sliver of a win, or at least mitigate some of the risk, I can probably walk away and survive, mostly unscathed. But I do need to see price cooperate here in the next 40 minutes. So I'll come back and watch this. Chart alarms are set. Are we going to poke the highs again? Are we going to break this 64.38 low? That's SPX. Let's take a look at some other stuff. Currency strength on the day. So Swiss getting stronger, pound and euro, dollar and CAD weakest today in currencies. Let's go to gold. So dollar index was going to be one of our weaker instruments today. So dollar's down slightly. It's still making slightly higher lows. I think the dollar still catches a bit of a bid here. Oil has been sliding lower below that 65 handle. I still think there's really strong support at 55 in case we get down there, but we also might just slingshot back to 65 and be choppy around that 65 handle. If we go to gold and silver, gold really didn't do anything today. We're sitting at a 50-day moving average. I don't see gold stretching too much higher than previous all-time highs. I think gold is still at best in a range. So I'm not sure how short-term you are there, Summit. But if we have a range trade, gold looks like it's just posturing for something like this. Choppier, 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 choppier. If we break and go higher, I think that's a great trade on gold. If we stay more range bound and we just go sideways, then we have either this level to go back and forth, okay, or we pull back a little bit deeper and then we have kind of a, dip below. If we dip below, close above, I like that for a long signal. And when I say dip below, I mean some of these moving averages. If we dip below the 144, we dip below the 200, I'm looking to see if I get that dip and then close above and then go long on GLD. So that would be the same thing here. So XAU, I don't trade because I'm a US trader, but GLD, I have a bunch of puts down here. So I've sold a 280, 275, 270. I did a ratio spread with a 285 by 281. I'm willing to own shares of GLD down here to kind of get a discount on it, but I'm just not going to buy and hold in here. I already have shares from 2 years ago that are up a ton. Okay, so from my initial 2022 bull market, I was long in gold here around 170 to 180. I've been holding gold that long, so GLD has been very good to me. I've just been very patient on how I'm adding to either income trades or adding to my exposure. But I mean, that's a heck of a run, man. When we've got gold here from the bottoms in 2022 to current prices, we've had 110% rip on gold. That's pretty impressive. Okay, silver. I added some trades on silver. If you zoom out of the chart, we have all-time highs at $48. It's actually, I go weekly chart. It's a slightly higher high than that. So I've got 48. We've got 2011 highs at $49.90, almost $50, and then 1980 highs at 48. So between $48 and $50, I think silver has that as a nice go-to target. This is why I am leveling into my gold trades. So I'm putting on some puts. I'm buying some shares. If we pull back into I like the 50 period. If we pull back to the 50, this is weekly chart. Let me go daily. So if we pull back to, the 50 again or the 100, I think between that level for a bounce or the 144, 200 for a bounce, if we, kind of like this, we close above or we close below, close above, that little reflexive move, close below, close above, close below, close above. If we do that again, close below, close above, getting long, going long, right? With room up to like $50. So if that's my price target, any dips, I like buying the dips on silver. Richard, for the 545, I just added another leg to it. So all you see is the second contract. So yeah, I had these paired originally, but because I did the 35 by 45 for a second leg, I just broke it out and organized it where that's a 2 contract trade now. Yep. So watching this one. This one's probably going to be worth $100. I don't think we're going to get to 64.50 or above. I still have a pending order at that 64.50 again, but I don't think that's going to fill. $1 trading for 30 cents is probably not going to take. So it's kind of all about the 64.35 level. 64.35 gives me a fighting chance. Below that probably gets me a nice win. 64.30 would be like amazing. Just based on where we're at right now, if we drop 10 to 11 points by the end of the day, that'd be pretty baller. Okay, we go down gold and silver. Bitcoin at 119. We're not that far away from the highs. I'm going to set a chart alarm here. 123,336. That would be back to all-time highs if we get there. So do we poke the all-time highs on Bitcoin? Maybe. Ethereum's had a pretty good run here these last few days. We're up to 4,500. All-time highs in Ethereum back up to 4,860. Like quite the run, looking like we're kind of finishing a 5-wave structure, unless this is like an aggressive 3-wave. So this is 1, 2, 3. 1, 2, 3. Maybe a pause or a pullback before we complete the 5th, unless this was a tiny little 4th wave pullback and this is the 5th wave completion now, which I'm not quite sure. But either way, I bought the swing, took profit near the high. I was happy with that trade. We're up above it. I'm giving back some profit. It's fine. I took the trade. I'm just more like stacked into Bitcoin now. Okay, but pretty good run. Copper. Let me actually price a trade out on copper. Let me see if I can get something in around the 4.04. copper. This is HG. I want this to be defined risk. Let's see what the option contracts looks like for copper futures. So if I go out to November, December, 4.04. I'm not sure what the futures contract is, but that's my price point, 4.03. Let's see here. 4.05. Let me get this option chain to fill up. So what I'm going to try to do is basically see if I can get a fair, I'm not going to say high reward to risk, but fair reward to risk, and see if these April lows will hold. Because if all this was a distorted kind of tariff reaction, and then copper is going to make its way back up into a pullback zone, I can probably see some profit. But I want to make sure like the risk is not ridiculous, because this would be an out of the money trade. So 405, if I buy, sell, buy, so I can get about $50 of income on that trade. That's a horrible trade. I'm not even excited. So I can risk $1,100 to make $60. No, thank you. If I go wider, I can risk $2,300 to make $160. Now there's a profit trap in here with about an 87% chance of profit. Now, as far as like reward to risk, I mean, I'm risking more than I'm getting. The probability of profit is pretty high, but I just think it's a backward trade that I'm not that interested in. That's what I was afraid of with copper, is I wouldn't have a fair reward to risk. I don't want to risk, 1% or more than 1% on some of these accounts for a little measly, $150, $160 winner. So I'm just going to stay the heck out of it, because if we continue to slide on copper, that's not good either, right? If this is a sign of things to come, and this disrupted move is a pullback, and we're just going to come back down and revisit these lows, then these April lows are not safe, and I don't want to get in the way. So I think calling a top or bottom on copper at this point after a 25% disruption is probably a little silly. Okay, DAX hanging out near the highs, FTSE getting back up near highs. I think we'd still have to have like just a tiny bit of a pullback here. I mean, this is kind of nuts. If you had a chance to get long on the FTSE, it would have been maybe when we close back above our moving averages, but that's a long Liberation Day scare to get this market back to all-time highs. I'm just looking for any type of pullback where we get some dynamic support. If we don't get it and it just keeps running, I'm not chasing this. The way I'm participating in UK and Asia is SCHY, which is a non-US dividend, or I'm sorry, non-US ETF. So I'm at some fresh highs on this one, which means I've got some profit on it. So SCHY. So portfolio on SCHY is, let's go here. Here we go, SCHY. So I'm up about $4,800. Bought some shares of this. It was cheap enough. So this is a Schwab dividend. This is Schwab growth. Collectively between those, I mean, dividends are down, but dividends will pay somewhere between probably 5 and 6%. Not saying that's great, but I'm just going to offset some of the shares here. So I have shares of dividends, I've got shares of growth, and then I've got non-US. So between these three, it's like I've got some profit. I mean, there's about $7,000 in profit. Not bad, but not huge positions. Okay, not huge positions. What else? Market breadth, currencies. Let's get to currencies. Anything happened in the bond market today? Bonds are probably down. Let's go TLT. Yep, bonds down a little bit, 86, 89. Probably still just, I mean, if we're lucky to see a stable bond market, we're just going to see it do this. Okay, I would say the next big catalyst for bonds is going to be somewhere around the Fed rate decision, honestly. I don't think the premium is that great to do like an iron condor, but I know we have the rate decision on, it's probably more capital efficient in bond futures, but let me see here on TLT. We have the rate decision on the 17th. If I went to the 12th, could I sell, let's just make it delta neutral. Let me see what these deltas look like. So this is going out September 12th. The Fed is going to be the 17th. If I do a 16 delta, that's a 90. I do a 16 delta down here. That's maybe an 82.50 or 83. I don't think I'm going to do a naked trade. I'm only getting 24 cents on this. This is probably a terrible trade. Bond futures might be better, but let's find out. So 16 delta would be about 82.50. So I get 40 whopping dollars to risk everything. If something terrible happens, I'm at a lot of risk there. So if I do a spread and a spread, I mean, that's a freaking ridiculous trade. Like, there's no money there. Bond futures, maybe a little bit better, but iron condors are going to be backwards reward to risk. So probably not a trade I'm going to take. All right, it's 3:30. So we got to call in the magic bears if they're going to come in and do anything to get this market to tilt a little bit lower. So chart alarms are set. I'm watching, standing by. If I take a loss on the day, so be it. But if we break 38, get down to 35, then you might hear a little bit more excitement in my voice. If we break and go higher, I'll get some additional trades and fills. I'll see where the cash settles at the end of the day. But it might be a $500 to $1,000 loss. So we'll see. Joy, you asked that earlier, right? I'm still in the trades. Okay, I'm still in the trades. So, I mean, I've updated the trades all day. I gave you all my pending orders, and this is what I'm in. So I'm in this trade, this trade, this trade. Right now, that's it. So I have bear call spread, bear call spread, bear call spread. And right now I'm down about $1,400. So if price gets worse, it gets worse by a little bit more. If price gets better, then these improve. Okay. So we'll see how, I mean, there's only 28 minutes left. So, I mean, how this thing settles on the day, I don't think we're going to go too much higher than, the highs are on 44, 45. I do have this gamma level sitting at 64.50, which it could freaking find it today, I guess. That was quite the, that's quite the run. That's quite the run from the close here to go up and find a gamma level that's 1.16% away with a VIX that was only at 15. Now it's at 14.9. In fact, the VIX is going up slightly, and we're going up in price, which is kind of annoying. Because if the VIX is going to go up a little bit, I'd like to see price go down. So, at the end of the day, it's like you survive the day. If I lose, $1,000, so be it. I'll make it up in 4, 5, 6 trades. I know how to make money. Unfortunately, just, not a winning day. But I didn't do anything wrong. It's like I've had, 75 out of 80 trades that I've won with this exact same method. And today I end up taking a loss if that's the case. So we survive and move on. We, dust ourselves off and go trade tomorrow. That's all you can do. All right. But we still have 27 minutes. Maybe we get lucky. Maybe price wants to do something magical at the end here to get us back down to 64.35 or 64.30 and kind of finish the day with a bit of a decline. If we did, that'd be fantastic. All right. TLT, we're good. I was looking at bond futures. I just think it's just not something I'm going to trade. I think the backwards reward to risk is not worth it. So here's bond futures, again, very sideways. I would just look at it being delta neutral, 117 to like 110. Let me price it out. So I'll go ZB for bond futures. And go to 24 days out probably isn't going to make me a lot of money. I don't want to really trade this through FOMC. So the 5th. If I go delta neutral, let this order chain fill up a little bit. Okay, so if I go, let's see, 17 delta and maybe this 111 handle. Come on, option chain. That's a 15 delta, so I'll go 15. So that's a $480 winner with a naked strangle, which I'm not going to do. So if I went, let's say 1 point wide, I make 177. My risk is $800 to make 187 if I hold it all the way to full profit. I just don't think that's a good trade. If I'm going to take this mechanically, I'd take the 187 max profit, probably close it out at $90 or $100 and be happy. You know, like we're only 24 days out. I mean, because something terrible happened between now and Jackson Hole, now in NVIDIA earnings now. And I mean, this is the expiration is before FOMC, but I just think that's way too much risk. So I will pass. I followed an interesting study this last week to see that about 95% of the time for 2025, the expected move in bonds has been greater than the actual 95% of the time. So if you're a premium seller, that's a lot of money. That's just good consistency. I'm not saying it's easy, but you're taking backwards reward to risk the entire time. You know, you're making about $100 to risk about $800 every single time, but you're winning a lot of trades. So, I mean, hindsight trading is easy. I don't like that backwards reward to risk. So not dabbling in bonds too much outside of, you know, a diagonal spread that I've got running. Okay, let's take a look at some currencies again, just revisiting. Just got filled SPX at 9, so I got a $1 risk on that one. Go back in here. So this is a 64.35 by 45, $12 credit for 30 by 45. All right, well, this just got real exciting. So now I'm really just going to add up the numbers. So this one's going to be good for hopefully $100 by the end of the day. This one, I now have 2 contracts on the 64.35 by 45. And then I have a 64.30 by 45 and a 64.30 by 40. So literally all I have to look at is what does the numbers add up at the end? So there's $800, there's $800, and this one's probably going to be plus 100. That's where it's at right now. Okay, we still have 23 minutes. For every little dollar that goes lower, that should be helping my trades. For every little dollar that goes higher, I'm not risking too much more to the upside. I literally took on 2 trades for an extra, let's see, this one filled at 9. This one is not yet there yet. This isn't there yet. How's that not there? 1250. Shit. All right, well, this guy's taking on some risk. I don't know. Market's being a crap today. I guess I should be, you know, happy and thankful and oh my God, what an awesome day. I'm up, I'm up $14,000 and I'm mad. But it's because mechanically I was looking at selling the highs and calling the resistance level from July 31st, and markets don't seem to give a crap about that right now. So let's see how the day settles. I got a couple trades running, and it's going to be cash settled. So this trade is in right here. This is a bear call. Okay, so that one's going to max out at $250 risk. This trade here, would max out same at $250 risk. So I either win the day or I don't for this trade. I either win the trade or I don't for this trade. And I either win the day or I manage my risk because I've got a lot more activity in this one. So adding up the total here, adding up the total here, adding up the total here, and see how the cash settles in the next 20 minutes. Yep. So Richard just asked about the 9 and 12. I just got filled. I got filled for $12 on a 15 wide, and I got filled for a $9 on a 10 wide. So it's not a ton more risk, but let's see if price can actually respond and reject off these highs a little bit. So ideally, what I'd like to see is this. We've got 20 minutes left. If price can come up here and get us filled and start to work its way back down, that would be super awesome. Okay. I know. All-time high, home prices all-time high, Bitcoin all-time high, gold all-time high, money supply all-time high, national debt all-time high. I know. It's scary what it all means, isn't it? You know, it's like this market has climbed this wall of worry an impressive amount for the last couple of years as it's been, look, since 2022 was never really called a recession. It wasn't called a recession. It was just called a bear market. But since 2022, everyone's like, we're coming out of 2023. Where's the recession? Where's the recession? Inverted yield curve. Where's the recession? Where's the recession? We didn't have one. 2024, wall of worry. Where's the recession? Where's the recession? Didn't have one. 2025, we break the entire global economy for a week, and then we pivot hard and we rip up to all-time highs. We're not having a recession, right? Not yet. It's AI craze. It's AI everything, and it's crazy. But the famous saying, as you might know this, okay, John Maynard Keynes, markets can stay irrational. Here's the quote. Markets can remain irrational longer than you can remain solvent, right? And I think it was Peter Lynch that said most traders, lose more money waiting for corrections than getting corrections. So I'm telling you, like, we can climb a bubble for months and months and months. We can climb a bubble for potentially years. It's not a bubble until it pops, right? Like, all it is just swelling and swelling and swelling, and nobody knows how big these bubbles can get. So is it a bubble? I don't know. Some are trying to justify that it's not. Some trying to justify, like, these evaluations are fine. It's different. It's different this time. It's like, I don't think it's different. I just think we're going to have higher highs in the markets that we deal with, like, bigger, nastier, faster pullbacks. If something really turns the corner and we have like a terrible down spiral in the market, then you hope you don't get burned too badly, right? But at the end of the day, all you can do is have a long-term horizon, play the inherent bullish bias that's about 55%, and manage risk. That's all you can do. I mean, the fact that I'm sitting here at $406,000 for the year is fine, but I'd like to be up to 500,000. How do I get there? Well, I've got to have some more trades come to fruition. I've got November's and December's and January expirations. I'm not terribly bullish out into 2026. I'm bullish like through this year. I think that even if we have dips and pullbacks, we're still pretty resilient into this year, especially with everything you just said, all these things at highs, and the market's still going to experience a rate cut by the Fed. You would think these things should be good. Okay. All right. Really quickly, let me take a quick peek at this trade. This one might actually be offering a few bucks. So bear call spread, it's a quick $150 on this one. This is a break even of 42.50. This could be a surprisingly good trade. Let me see if I can grab 200 bucks of this one real quick. So this is 12.50 already trading down. So I'm going to take a winner here. So that was 10. That's over 200 bucks. Oh yeah, baby. Let's get that 10. Okay, we're going down a little bit. Come on, price. Up $227, 10.10. Okay, I'll go 10.15. All right, I just got filled for 10.15 on that position. And this one here, up 230 bucks. Close this one down for 10.15 as well, hopefully. 9.85. Ooh, even better. Okay, so if you got filled with the $12, this is daily profit light update. If you got filled, DPP update, some quick action bear call spreads. The 63.40, it was a 63.30 SPX, 6430 sell call, 6445 buy call, 12.50 or no, $12 credit, 12.50. So 12.50 credit entry, closed at 9.85 profit for winner. Okay, I have some other ones. So that was a quick winner for that's 9.85. So 12.50 minus 9.85. I just made 265 on that trade. And then this one here closed out for 10.15. So that was 235 bucks. So 12.50 minus 10.15 made 235 plus 265. Oops. So 235 plus 265. So that's $500 right there. And all I'm trying to do is just manage risk. So I'm up $500. Now for the rest of these trades, let's go here. This trade is down 277. This one's down 5. This one's up 88. This is going to be $100. Like this one should be $100. So this would be good for 100. This one I'm going to manage into the close. I do need to see price. If we can get to 64.35, I'm going to get really, really lucky today. We still have 15 minutes. Let's see if we can reject a little bit. Is the uncertainty of who's next Fed chair replacement? I don't know. That stuff, I mean, honestly, we have like a shadow Fed right now. I mean, I don't think Powell's going to necessarily leave. I think it's optically, it looks pretty bad if he leaves or resigns. So more than likely, Fed Chair Powell's just going to stick it out until he's officially done with his term. But who is who's the shadow Fed right now? I think it's like starts with an H. Trump's Fed appointee. Friedrich? No? I don't freaking know. I don't know. We've had this. It's like a shadow Fed. So now it's like the Fed board is seeing somebody else on the board, and it's getting shaken up. We had a resignation. So I think the Fed is just, it is what it is. Like the Fed doesn't really matter. It's monetary policy through and through. Or, I'm sorry, it's fiscal policy through and through. And I think the only way it gets really disrupted is if one, Trump tries to sue Powell, or two, Powell leaves. And maybe that's more of like a disruption. No wonder I didn't remember that. Hegseth? Is that the name? Who is this? Hesgeth? Oh boy. Hegseth. Pete Hegseth. Oh. That guy looks like an experienced Fed chair, doesn't he? Is that the guy? I don't know about that. I don't know. I'll do some research. Steven Mnuchin. I don't know, man. Who cares? Does it matter? If it's bad, prices will reflect it. If it's good, prices will do what they've been doing for the last 3 months. So I don't think it's Hegseth. I want to say it starts with an F or an H. I don't know. Who cares? We'll find out tomorrow. But nevertheless, I mean, it's essentially somebody on the board of the Fed now that's going to rattle things up and try to convince the Fed that, tariffs aren't inflationary and that cutting rates is the right action. And that basically means that Trump is getting everything he wants in cutting rates faster, and we will see what that ultimately does to the economy. I think that we end up running this economy super freaking hot, and this growth does become a potential bubble, right? If the Fed does not cut rates, we're going to risk restricting growth, which is what I think we truly need to avoid a stall in the economy. I think the market has to avoid a stall. So, all right, this is down 327. This is down 548. This one's up $85. I just closed out for 265. And so, I mean, net on the day, we're going to see how this thing settles. I might actually end up winning the day. I'm up 265 and 235. So I'm up $500. And right now I'm down about 850. So net, I'm down a couple $100, but I would still settle that. But if in the next 12 minutes we can get down to 64.35, that is a big potential winner. So this trade right here, if I get this thing back below 64.35, this one should be worth, it's going to be close, man. This one could be worth about, I don't know, $700 to $800. But we got to see price get back to below 64.35. So I need another 3 to 4 points to the downside. Federal Reserve Trump to nominate economic advisor Moran and new Fed governor replacing. Yeah, Kugler is the one that resigned. Stephen Moran, is that the one? All right. And what I was saying is this: monetary policy isn't nearly as important right now, outside of being accommodative. If the Fed's going to cut, that's good. Even though we're sitting at all-time highs and everything, it's probably better that the Fed cuts and plays the growth game, allows the government to, promote the growth game, because if they choke growth, we're not going to outpace inflation. We run the risk of the stagflation that everyone's been worried about. We run the risk of turning over from stalling to declining, right? So it's trying not to let the economy stall. Because if the economy stalls, we all of a sudden start to lose altitude. Once you lose altitude, that's where things get a lot worse. There we go. Now's that freaking fall. Let's go. Don't do that. Get down there. Look at that price manipulation. Look at that garbage. 350. Come on, man. Don't do this shit. Poke the lows at 38 just to rip back up another 3-4 points. Come on, man. This seems a little manipulative, if you ask me. Look at this nonsense, man. I swear by the end of the week, the market's going to be lower. What a stupid freaking move. So if I've got some magic coming my way in 10 minutes, we'll find out. But that's a really silly price action these last few minutes. Joy. Yeah, I mean, it's not fun. I just got excited for like a split second because we were down to 37, but now I'm taking on all that extra heat. So went from down about $600 to now 1,600. All right. I mean, you'd be surprised what can happen in 9 minutes, though. But going back to these highs again is not a good sign. Gosh darn it. Come on, just give me some ounce of fade, would you? Gosh. Oh, what a crazy day. What a dumb day. You know, it's like this happens. Like, I didn't do anything that was not according to plan. I was patient on the day. I didn't force a bunch of trades. The market, from my calculations this morning, you know, we've gone up 1.8%. The market was supposed to go up about 0.9%, 0.95. We've exceeded that. Look at my ATRs. Usually the market is pretty contained within a 50 to 100% ATR. We're above that. We're trading like a 110, 120 today. And we're up, right? Like usually it's the ATRs are exceeded to the downside, not the upside. So it's just a day that just got messy. So we've got 8 minutes left. I'm going to see how this thing cash settles. I mean, fortunately, I did grab $500, so that kind of helps offset some of the burn. But, you know, go find another day. That's all you can do. All right. And if, like I said, if something magical happens here in 8 minutes and this thing fades hard, then maybe I can mitigate some of that risk. I've got a chart alarm set at 64.37. If we can take out this candle, that's a 5 minute. So we still have this 3 minutes to close, and maybe the final 5 minutes for this thing to settle. But if we can give back this move, that'd be awesome. I don't know if we're going to, but if we give back this move and get to 64.37 or lower, then I've got a fighting chance to survive. Yep. Yeah, Pete's up 8%. Good, man. Yeah, I mean, that's the thing is like, you know, when I take trades like this, it's like it's a one-off trade. I mean, I'm still grinding. I'm still positive, but it's like, yeah, I mean, I've got 14K on the day. The portfolio is up. I'm enjoying the melt up as I should. Sometimes day trading is tricky, you know, but if I get beat up with a level that's going to help me still survive, it's like I can make it back up. It's like give me a couple weeks and I'll be back on top again. I just have to trade through it. Yep. So we'll see. All right. So final 7 minutes. We'll see where price settles. I'd love this 64.37 low to get hit again. Because even here, that was a really like crappy price action spike. I mean, a candle that goes from 37 to 4. It's an 8-point candle. But I mean, we look the big gamma level is 64.45. We freaking poked it. Give me some rejection and not settle there for the day. But we'll see. I mean, again, this stuff's out of my control. All I can do is take my trades and manage risk. So if the risk on the day is I lose $1,000 and I net, you know, maybe a $500 loss, it's like, okay, I survive. See if I can grind it out to get positive by the end of the week. But it's not about revenge trading. It's just knowing like there is a process. You know, process is I make a few $100 a day, do my thing, and in a couple weeks I'm back on top. But it's silly to like double and triple down. It's like that's not how you get back. You dig yourself a deeper hole when you get risky like that. So not fun, annoying, but it's only on, you know, my little play account, not client accounts. Everything else is pretty solid. So 410 is my high for the year. So I'm at 406. I mean, I'm pushing up near highs for the year. Are we going to try to poke the stupid gamma level at 50? Yep. And I swear if tomorrow this thing just like bleeds lower, I'm going to be so angry. All right, we got 5 minutes. Give me an amazingly heroic 5-minute bear candle. Come on, bears. And so this thing does cash settle. So if we can stay, I don't know. We'll see. If it goes green, then I've got pretty much max risk on the day. Above 45 would be my max risk. If we're below 50, I'll still make $100. But gosh, I'd love to see that little noisy candle give me something to the downside. It's a lot riding on 5 minutes. But like I said, I mean, process-wise, I didn't do anything wrong. I followed my plan, and I ended up coming out with a potential. I mean, probably a loss. Probably a loss. It's just a matter of what's the calculation. But I'll run the numbers at the end. I'll see where I'm at. All right. And not only does this, I'll watch this for the next 4 minutes, but also where it's going to SPX cash settle by the end of the day. So this is, I mean, I even have a different price feed here. Like this price feed down to 37. This price feed is right at 37. And they're both 5-minute time frames. That's an interesting, like, kind of wick for that candle. Okay, 4 minutes. Crazy day. From the close, market's up 1.1%. VIX went down all day. Son of a bitch, I just got filled at another freaking $9. It's just another $100 to add on top of it if I'm wrong. 3 minutes left. We'll see. All right. And this, I've said this before, the hardest days in 0DT is when the market is sitting at the highs of the day and won't budge, or sitting at the lows of the day and won't budge. If you're trying to fade highs or bounce off lows and it just trades off those highs and lows and it won't budge, like you're just going to take risk. So that is super annoying. But with 3 minutes to go, market just like, let's go, 64.50. Come on. Magically fade a couple points, would you? And again, I mean, the most important lesson for today is like, you don't take this away as, oh my gosh, I blew up my account. If that's your answer to this trading day, when you lose on the day, it's like you're trading way too big, you're leveraging too much money. Like I'm annoyed and frustrated that I did all the right calculations that I typically do, that I win most of my trades, and the market just like, we're going to go up, 0.1 to 0.15% higher than was really calculated by multiple instruments. We're trading about 125% above the ATR. We've got the VIX that started at 15.3 that ended up, I mean, look at this spike in the VIX. Like we've been going down all day and the VIX still. But that's why I said potentially when I looked at the markets this morning, I said our potential, 64.50 to 60 top. And that trade still, it's trading for, that's not going to fill. We're at 45. Yeah, I'm going to cancel that trade. Okay. And 55.65, that's not going to fill. 44. I mean, that's as bad as it gets. So, and might end up being like a $1,200 to $1,300 day to the downside. Son of a biscuit, man. Ugly, ugly hippos. Also pushing fresh highs right now. Closing bell 46. F&A cotton. All right, so we closed at 445.78. That's my max, unfortunately. So 30 by 40. I'm gonna ungroup these for a second. So ungroup and ungroup. This one is a winner for $100. Yippee skippy. All right, so how'd this settle? I have a 30 and 45 for $12. Okay, that would have been down. So I've got $250 in that one that I lost. So minus 250. Okay, I have a 30 by. I've got a 30. This is it. So I've got the 30 by 40. That one's going to be down a full 10. So that's where it gets a little stanky. I've got two contracts there. The break even on that trade, let me put these together. So the 30 by 40, these contracts are all jacked up. So this might be a little bit easier to figure out. I'm just going to look at how cash settled on the day, honestly. Maybe it gives me the trade history, but I'll probably have to check tomorrow morning. History, SPX for the day, just today. So I'm going to see how this thing settles. If we're sitting at 45, I don't think I pulled in anything positive today. I think it would have been down probably close to like $1,500. All right. So getting filled at, I'll walk through this trade. So this trade right here, we closed at 45. This would have been a $100 loss. I'm just going to go through the numbers. So this trade is minus 100. Okay. This trade was 12 wide. So that'd be 64.42. This would be down $300. This trade would be down $100. This one for 35.45, that's down a max of $4.55. This one was a winner of plus 100. That trade was break even. And then the original trade this morning, that's max at, I got in for, this is 1,800. So this is where it stings on the day. Now I'm not done. I still had some profit. It'd be 1790 would be my max here. So 1790 is my max. So let's add this up. So on the day, I had minus 1790, minus 100, minus 455, minus 100, minus 300, minus 100. So I was down 23.45 today. So 23.45 on average, my winners are, $100 to $200 on a normal day. And so what does it do? It takes me, let's say 10 trades, 10 to 15 trades to get back to break even. I can hammer that out in a week or two. So, it's just like you can't be deterred like this strategy doesn't work. I did nothing wrong today, but it sucks that I lost. So I shrug it off. I'll trade again tomorrow, and I'll just keep grinding and see if I can have the mechanics of the trade work out. What didn't work well today? Well, the market clearly got excited with this volatility this morning. Was up all day long. Once we broke to these highs, it just didn't stop. The hardest thing about zero DTE is what I said. If you're up near the highs by the end of the day, it stings because there's no rejection, right? A lot of times what we see in a 0 day is either the market goes up to a level and rejects, or the market goes down to a level and bounces. There was literally no rejection today. Okay. Levels. We traded up to 64.45. Well, 50% ATR, which is normal behavior, hit immediately. 100% ATR hit later in the morning, stretching all day, still going to about 125% ATR. As far as standard deviation go, this was an outlier type day. But it is what it is. I traded, I lost, I survive, I'll go trade another day. Okay, so that little like fake out candle was kind of that one stung, because that took me in for like the other, $300 risk and $400 or 300, 100, so that was another $500 risk. That had we, held red, that would have been mitigated some of the risk, but whatever, you just trade and move on. So tomorrow's another day. Let's grind it back, and I'll track everything in daily profit play, and we'll go. Okay. All right, buddy. Let's do it again tomorrow. So tomorrow morning, just so we know, we're going back to the daily profit plan at 9 a.m. Eastern time. Tomorrow's going to be Watch List Wednesday. I'll pull some trades from my pinch point scanner. We will have a little segment on anatomy of a trade. Today we talked some debit spreads. We talked credit spreads this week. Tomorrow I might sprinkle in a butterfly spread. If anybody's interested in any of my trade alerts and services, trade with me every day, trade with me every week, trade with me every week, trade with me every week. You want a scanner that spoon feeds you great trades every single week. You want to protect your portfolio. You want to have some income trading. Like right now, the reason I'm up $400,000 is a lot of this is how I trade with Project Options Edge. Anything goes, kitchen sink, whatever it takes. Income. You want good education, how to get started on 13 of my favorite option strategies. Quick guides, $27. Full guides, $497. If anybody buys a course of mine, and you upgrade to lifetime, I'll give you a free full course, which I usually sell for $500. So just throwing it out there. I'm here to trade. I do it live. It's real money. And days like today are annoying, but I still finish the day, positive. I'll grind this out again tomorrow and continue to do what I can to grind out new highs. So off we go. Okay, everybody. Thanks for being with me. Come back and do it again tomorrow. We'll be live at 9 a.m. Eastern time for the daily profit plan. Double ups will be live for workshop day number 2. We had a good session today. We'll do it again tomorrow. And let's try to carve out some profits tomorrow. All right. Thanks, everybody. Bye. I'm just typing in here 9 a.m. Eastern time. Let's see. I'm going to post a couple things. I've got a Telegram link if you'd like to join my Telegram. So right here, Telegram link. Everyone can join. That gets you into live sessions tomorrow. Also, if you'd like to opt in through your text message, I've got a link for that as well. Give me 1 second here for SMS. So daily profit plan room. And if you'd like to join my Discord, I'm going to put the Discord link is going to be good for 30 minutes. Okay. And then Chris Pulver, trading, Discord. Okay. So Telegram, if you want it on your phone, there's an SMS opt-in, and then there's Discord. If you come to my Discord, just please read the rules, right? I don't send friend requests. I don't send direct messages unless you ask me. Unless you're sending me a private message, I'll reply. Otherwise, I just stay in the public channels, free group chat, Forex, stocks, options, futures, all those individual channels. And then anytime I go live, it pops up on YouTube, private instruction, discount, savings, tech, stuff like that. It's all one place for all my services and links. Cool. All right. Now we'll come back and do it again.